So if we go back to the story, the IRS overlooked billions in taxes from S Corp execs. And again, they're not executives. They're the owners of the company. Generally not executives. They, could be the guy out there plumbing in S Corp plumbing. He's out there doing plumbing. So he's not an executive in the sense that the picture they're trying to paint here, right? So let's review the story. The Internal Revenue Service has stepped up efforts to collect employment taxes from S corporation officers, but business owners are still getting away with avoiding billions of dollars in taxes. They're stealing. They're evil. They're the cause of our problem. No, they're not. But that's what they want you to believe. A new report released Tuesday by the Treasury Inspector General for Tax Administration, and they're going to see this acronym in there in this story, found the IRS is selecting less than 1% of all S corporations for examination for compliance with payment of employment taxes. So, and I've had a lot of clients come to see me and I ask them, are you a corporation? Well, yes. Are you paying self-employment tax? Well, no. Are you paying yourself as an employee? Well, no, I'm not. Okay, so they're not paying any taxes. One of the problems with this is when it's time for you to retire and you're trying to get Social Security, you're not going to have Social Security because you're not paying into it. Well, again, if I didn't have to pay Social Security and I took that money and put it in an IRA, I'd probably be much better off. But that's not what the law allows. Okay, so they have audited less than 1% of these companies. Even when there's so here's the thing. Nearly half of IRS revenue agents don't evaluate compensation. Even when they do examine it, nearly half of IRS revenue agents don't evaluate compensation during the examination. Even though there's a sole proprietor who didn't report officers' compensation and may have taken tax-free distributions in lieu of compensation. And that's just what I was talking about. So you're not paying yourself as a employee, and so you're taking distributions from the company, and you look at, well, it's my company and the profit's mine. That's true. But because you're not an employee, you are subject to self-employment tax. The report comes less than a week after investigative sites like ProPublica. Now, ProPublica is the company that released all of those tax returns from the billionaires and millionaires, and in my opinion, misrepresented what that meant, because there was no allegation that these billionaires and millionaires didn't pay their taxes as the law requires. They just looked at the taxes they paid, compared it to their wealth asset value, which is not how we tax in America. And that's what we were just talking about capital gains tax, and saying, hey, see how evil this is? So now they came out with an investigative site that reported how business owners were leveraging a tax break stemming from the Tax Cut and Jobs Act of 2017 that enables them to save millions of dollars in taxes by being paid in profits rather than salaries. That's not what the Tax Cuts and Jobs Act allowed. It didn't allow them not to be paid as employees. So that's a mischaracterization of that law. That law did not say that you don't have to pay taxes. Tax advisors have been promoting a strategy that encourages business owners to reduce their own salaries while increasing their own company's profits, which they can then use. Well, it's true. Now, you're supposed to pay yourself a reasonable fee. So if I'm a plumber, then I should pay myself a reasonable fee as a plumber. So if plumbers generally make, and I'm just guessing, and again, it's just an example, so I don't want to hear from plumbers who tell me I'm wrong. Let's say a plumber is making $100,000 a year. Well, then I should pay, as an employee, I should pay myself $100,000 a year. Anything over that would be a distribution from the company, and I wouldn't pay taxes on that. And so that's what they're talking about here. Tax advisors, okay, the strategy leverages the lower tax rates under the TCJA, where profits are taxed at a top rate of 29%, as opposed to salaries being taxed at 37%. So this was the reduction of profits was the the payback when they gave all of the C corporations, the big companies, these tax breaks. People who are S corporations say, wait a minute, why don't we get these tax breaks? Why do we have to pay income taxes when these companies, other companies, do not? And that was the negotiated back and forth between politicians, that they reduced the profit, the taxes paid on the profit of the company rather than on wages and income. So which was 37% plus additional Medicare taxes. That the AG report focuses more on employment taxes, also known as FICA, that's Social Security, for the Federal Insurance Contributions Act. Okay, so business owners have been leveraging this strategy for a number of years, predating the passage of that act. The issue of S corporations not paying salaries to officers and avoiding employment tax has been reported for many years, said the report. IRS revenue agents have the opportunity to assess the issue when examining Forms 1120S. That's a corporation's tax return. An S corporation's tax return is an 1120S. U.S. income tax return for an S corporation in the field, addressing the issue more directly by examining it in the IRS's employment tax function or through compliance initiative projects. Okay, so again, they're just saying, hey, people are not paying themselves as employees as they're required, and they're just taking the profit and paying, if they report it, they're not even paying income tax on it. For its report, the IG analyzed the S corporation returns received by the IRS between 2016 and 2018, looking for returns where the profits exceeded $100,000. There was a single shareholder and no officer's compensation was claimed. So this is what I was talking about. Now, the proper way to do this is as an officer, take a paycheck, right? I'm an employee of the company, and then any profits would be less than the $100,000. So, and no officer's compensation. So over $100,000, there was only one owner, and then they got that. So they took the $100,000 as income, as profit, actually, not income. And they didn't pay themselves like they're supposed to. The analysis found that single shareholder owners made profits of $108 billion and took $69 billion in the form of distribution without reporting they received officers' compensation, for which they would have needed to pay Social Security and Medicare taxes. They estimated 266,095 tax returns may not have reported nearly $25 billion in compensation, allowing business owners to avoid paying approximately $3.3 billion in FICA taxes. Okay, so why I'm bringing this up is when they start posting these stories, what they're telling you is this is what they're going to go after, and they're justifying it. Now, it is true that that's what the law requires. If they haven't been enforcing this rule, and our tax code is so complicated, in most of my instances where I've come across this, it's only because people didn't understand the way it was supposed to be, and that's why they avoided the tax, not because they were trying to avoid taxes or they were trying to cheat the government, but because they didn't understand it. And many times your tax preparer doesn't understand it either. Now remember, the IRS can go back 3 years to audit you. So if they start targeting S corporations and you haven't paid your income, yourself a salary, and you're simply taking distribution at the end of the year of all of that money to avoid and not avoiding self-employment tax, and you're not paying self-employment tax on this, what I'm telling you is you're going to be the target, right? That's why the name today, IRS targets S corporations. And if I'm an owner of an S corporation, I'm the target. So not the S corporation, because it's a flow through. They're targeting you. And when they go after the S corporation, again, you, the owner, because what happens is that all that income flows to your personal tax return. And then they will target the S corporation, but they're really going to target you because that's where the profit goes. And that's who pays taxes on that distribution, on your personal tax return. So if you've been doing this for a number of years and you continue to, and then they target you. The money you owe is going to be fairly large. Okay, they're going to audit you. They're going to say you should have been paying self-employment tax on that. So let's use the $100,000 that they use. Here it's actually more than $100,000, but let's use $100,000. Self-employment tax on that would be $15,000. So if they go back 3 years, that's $45,000. And they say, okay, well, and then plus penalties because you didn't pay all your taxes due, so you're going to failure to pay penalty. And if they hit you with some other penalties, if they say that you fraudulently did this, now there's going to be 75% of that $45,000 in penalties, and then interest going back to the beginning for the 3 years, compounded daily. So that number can get very large very quickly. Okay, so my advice to you, if you're an S corporation, first, I always tell this to S corporation owners anyway, you shouldn't file your own tax returns, okay, because that's a red flag. Because tax returns are very complicated, especially when you get to S corporations or any company really. So if you're doing a Schedule C deductions or Schedule A deductions, and you're doing it yourself, the IRS is going to target you because these are the people that make mistakes. Again, innocent mistakes, but because tax returns are complicated, it's likely that you're making mistakes. So it's likely that they're going to target you in order to, when they do an audit. And again, they can go back 3 years and then going forward. So what's an S corporation executive to do? Well, first, take action, right? Understand it right now. Get someone that understands how you should be paying taxes. I know most people are not trying to cheat. The last thing you need is the IRS coming after you and auditing you. That's the last thing you need, right? And so most people who are doing this, they're not doing it to be fraudulent. They're doing it because they don't understand. And so if you're running a company and you're an S corporation, and I got to say, a lot of people who are running S corporations don't know that it's an S corporation. So if you're running a company that is a corporation, any corporation, okay, so if you're a C corporation, it should probably be an S corporation, and there's some problems there that should be rectified because sometimes you pay double taxes then. And that's what they're trying to do now, right? They want to go back and say, okay, you should have been a C corporation. Actually, this is the second part of this story. So if I go back to the story, let me go back here for just a minute. I'm not going to spend too much more time on this story, although I think it's important, because then they go back to those that are not citizens, and people who aren't citizens can't really have an S corporation. So if they do have an S corporation, they can go back and here it is. Let me see. Another issue, involvement of non-resident aliens of business owners. They can't be S corporations. So the IRS can go back and say, well, you're not an S corporation. You should be designated a C corporation. And the C corporation has to pay taxes, unlike an S corporation. And then the IRS can say, so this was really a C corporation, and any money you made should have been taxed. And then it goes to you, and then you should be taxed. So then it would be double taxed. And that could be a hefty amount of money, right? That could be big. So I don't know how long we're into this. Let me see how long we're into this already. Okay, we're already too long. I had another story. I'll save it for another day. But I thought it was important to take the time and talk about this the way it's supposed to be in S corp. You are now the target. Okay, so if you're running an S corporation, get somebody for tax preparation that understands this. If you're going to owe some money, that's us. We understand S corporations. We can help you, try to avoid getting audited first, and then if you get audited, what to do next. Okay, so that's what we'll be happy to help you with. But I thought it was important that we talk about it.